If you're watching this video, I know one thing about you, and that's that you're trying to get ahead financially. And while everyone's out there flexing their Lamborghinis and penthouses in Miami, a lot of them are actually losing money doing the most basic things, like using their banks. So in today's video, we're going to break it all down. Everything that school should have taught us and how to use it in 2025 to build wealth and not get robbed slowly. This isn't going to be one of those boring videos that you've seen a million times from one of the gurus. This is going to be a real game that I promise will change your life if you stick around to the end. Let's be real. Most people only have a checking account. Some people have a savings account, but that's it. But what most people don't realize is that the bank is making money off of your money while it's just sitting there. You're only making 0.01% interest, and they're making money on that. Here's how it works. You put your money in, they loan that money out. They'll make 10% on a loan or a credit card, and you'll just be sitting there making pennies on your 0.01% interest. That's like giving somebody your car, renting it out to them for the day. They go around driving for Uber. They make tons of money. They give you $1 at the end of the day and just toss you the keys back. Listen, the market is rigged if you're uninformed, but if you take some time and learn, it doesn't have to be. Now, let's talk about one of the easiest possible wins, one of my absolute favorites, a high yield savings account. These aren't like your regular Bank of America or Chase banks. Oftentimes, they only offer online banking, but they'll offer you 4 to 5% interest just to park your emergency fund, and it's insane. Let's do some quick math. If you put $5,000 in a traditional bank account, like a Bank of America savings account or a Chase savings account, and you earn 0.01% interest, that's 50 cents a year. But if you put it into a high yield savings account like SoFi or Everbank, and you earn, let's say, 4.5% interest, that's $225. That's free money for doing absolutely nothing. So please keep your emergency savings account or even short-term savings in a high yield savings account, not a traditional one through your bank. The third tip is to automate your money flow. This is where things start to get super powerful. Set up your finances in a funnel. Let's say your check hits. Automate it so it automatically will send a percentage of that to a high yield savings account for your emergency fund. Then automate it so it'll send a portion of that to invest. Then what's left is what you'll live off of. No complicated budgeting apps, no stress. The system works while you sleep. First, it pays your future self, and I promise you that money adds up extremely quickly. In section 4, I want to talk about credit, because credit is a cheat code. I'm not just talking about credit cards, but I'm talking about credit as a whole. Let's say you want to rent an apartment, you need credit. You want to buy a car, you're probably going to need credit. You want to start a business, you're going to need credit. You need a mortgage for a house, credit. The problem is though, so many people either fear credit or they'll abuse it. All credit is you buy things that you were already going to buy anyways on your debit card, like food, clothes, anything like that. Then pay it off in full at the end of the month when the payment date is due. Then repeat. It's that simple and that easy to build credit and get a good credit score, and it's going to be super important in the future. Your score goes up and lenders start to trust you. Credit is your financial reputation. And then when the time comes for real investments like real estate or starting a business, you're going to be all set. And side note, credit utilization, which pretty much means how much you use your credit card, matters a lot more than people think. Try to keep your credit utilization under 10% of your monthly limit and watch your score shoot up fast. The fifth thing I want to talk about is how compound interest is a superpower. If you're saving money, that's great. The 4.5% in a high yield, that's even better. But investing your money, that's where real wealth starts to get built. Compound interest is essentially having a baby, then that baby makes babies. All right, let's use a real world example. If you're 18 and you start investing $200 a month, by the time you're 40, you could have over $130,000 if you receive an annual 8% return. Let's say you're 60 years old and you pull that money out, you could have over $600,000. And that's only $200 a month. No side hustle, no business, just time and discipline. The earlier you start, the harder your money works. And if you're young, you have the edge. Use it. All right, let's break down which accounts you actually need. First, you need a traditional checking account where you spend your everyday money. Next, you're going to try to get a high yield savings account where you earn 4 to 5% annual interest. Next, you're going to need a Roth IRA or brokerage where you're investing for your future. And finally, you're going to have a credit card where you spend money, earn rewards, and upgrade your financial trustworthiness. A bonus tip is to use budgeting. Use something like an Excel sheet or what we talked about in the previous video to see like a financial audit and just see where your money's going. It's not about perfection, but it's about understanding. Number 7, Don't sleep on financial tech tools because there are tools nowadays that can make money management much, much easier. There's tools like Rocket Money, which helps you track all of your subscriptions so you don't lose track of any that you're not using. Or Copilot or Monarch, which are super great budgeting apps which help you budget without the headache. Or Greenlight, which is more for younger users, but it helps you understand the basics of money management. If you hate spreadsheets, then this is the cheat code. Let all these AI systems do the heavy lifting while you focus on growing your money. Step 8 is to level up your financial environment because who you're hanging around matters. You're not just building systems, you're building an identity. Surround yourself with people that talk about ideas, not just gossip and TikTok. Surround yourself with people that budget and save and invest, people that will hold you accountable. Podcasts, YouTube channels, Discord groups. Build a circle that feeds your growth so you don't have to do this alone. All right, let's do a little recap. Most people are being robbed by the banks and you're not going to be one of them. Next, you've got the high yield savings account, credit strategy, investment mindset, and the motivation that you need. You're going to be stacking interest, not just cash, and you're going to leverage things like community, tech, and everything you need to build a strong financial circle. Look, I know this isn't the flashy stuff that's going to pull millions of views, but this is the stuff that'll make sure your future self will never have to struggle, and that's what actually matters. If this video opened your eyes, start making changes today. Thank you for watching, and I'm going to catch you in the next one.